Ever wondered what makes a company's stock valuable? Is it just about their profits, or is there more to it? Well, let's dive into the world of asset-backed stocks. These are shares issued by companies whose value is primarily derived from the underlying assets they hold. These assets could be physical, like real estate and equipment, or financial, like loans and receivables. Banks, Bank of America, and oil rig companies, Chevron, are examples of asset-backed stocks. So when we talk about asset-backed stocks, it's about investing in the tangible and intangible assets a company possesses. Now you might be asking, how do I invest in asset-backed stocks? Well, it's all about purchasing shares of companies that boast significant tangible assets on their balance sheets. You'll need to assess the value and quality of these underlying assets, as well as the company's ability to generate returns or cash flows from them. But where can you find these golden geese? They're scattered across various sectors, including real estate investment trusts, financial institutions, industrial companies, and natural resource firms. You can access these asset-backed stocks through your brokerage account, investing in individual companies, or via asset-backed mutual funds or exchange-traded funds. But remember, it's not just about finding companies with a treasure trove of assets. It's also about understanding their potential for returns. So, investing in asset-backed stocks is about finding companies with substantial assets and understanding their potential for returns. The question then arises, when is the right time to invest in these stocks? Well, investing in asset-backed stocks can be a strategic move during periods of economic uncertainty or market volatility. That's because these stocks offer a sense of stability, given their value is primarily derived from tangible assets. So, they can act as a safety net when the market gets a bit shaky. Also, when the market undervalues a company's assets relative to its stock price, that's another opportune moment to consider these stocks. It's like finding a diamond in the rough, so to speak. And let's not forget the benefits. First off, we're talking about tangible assets here, things you can see, touch, or even smell if you're into that sort of thing. Secondly, some asset-backed stocks can provide attractive income streams. And lastly, adding these stocks to your investment portfolio can diversify risk, potentially enhancing returns, especially during economic downturns. Thus, asset-backed stocks can be a smart move when you're seeking stability or when you spot an undervalued gem. As with any investment, asset-backed stocks come with their own set of challenges. Let's dive into a few, shall we? First up, we have illiquid assets. These are assets that can't be easily sold or exchanged for cash without a substantial loss in value. It's like trying to sell a grand piano at a garage sale. Not the easiest task, right? Next, we have asset depreciation. This is when the value of an asset decreases over time. Think about driving a new car off the lot, only to have its value depreciate faster than you can say asset-backed stocks. Finally, there's interest rate sensitivity. Asset-backed stocks, particularly those with financial assets, can be sensitive to changes in interest rates. Imagine being on a seesaw where the ups and downs are controlled by interest rates. It's quite a ride. Despite these risks, smart investors know how to navigate these waters and make the most of the opportunities. It's not enough to just know about asset-backed stocks. You need to know how to value them. So how do we go about doing that? Well, there are a couple of methods that investors typically use. The first is by assessing the company's book value per share. This represents the net value of its assets minus liabilities. Think of it as the company's net worth, but on a per-share basis. It's like slicing up a pie and determining the value of each slice. The second method is calculating the company's net asset value, or NAV. This involves subtracting the company's total liabilities from the total value of its assets. It's as if you're the owner of a house. You'd subtract your mortgage and any other debts from the total value of your house to find out how much you truly own. Let's illustrate with a simple example. Suppose a company has assets worth $100 million and liabilities of $50 million. The net asset value would be $50 million. If the company has 10 million shares outstanding, the book value per share would be $5. But remember, these calculations are just part of the overall picture. You also need to consider other factors like the company's ability to generate income from its assets and market conditions. Therefore, understanding the value of asset-backed stocks is key to making informed investment decisions. Remember, knowledge is power in the world of investing. Leverage on bullbearvector.com to find the right stocks and options to invest, helping you to save time and reduce costly mistakes today.